Welcome everyone. My name is Advent, or Desi if you know me in real life. Today we're going to be talking about futures. Let me actually bring this over. So this will just be the agenda for today. Briefly going to be talking about what futures are, what the risks are, tick point value, etc. Margin requirements, and where you can trade futures. As always, I'm not a financial advisor, so anything that you guys see or hear here is not financial advice. Trading does have its risks, so please do your research before you engage in trading. For those who are here live with me, all I ask is that hold most of your questions towards the end. After I finish each section, I'll just ask you guys if you have any questions on that before I continue, just so we can keep it streamlined and not be all over the place. Cool. So with all that being said, well, I guess I'll just keep it on this screen for now. So what are futures? To keep it super simple, I'm not going to really give you the actual definition, since all those resources are in the group or online. But essentially, futures are just another instrument, another trading product that you can trade on the markets. Similar, like options, Forex, crypto futures, crypto, etc. Futures is just another instrument that you can use to trade. Now, when it comes to the risks of futures, one thing that's very different for those who may be used to trading like stocks, like regular stocks, or like options, and specifically like when you go long on options, not when you short it, because that's like on margin, which we'll talk about in a bit. So for futures, it's you're pretty much using margin to trade. Meaning that you can lose more than you put in the account. For example, let's say you have $500 in your account, and then the position, assuming the broker or the platform that you're on doesn't auto liquidate you can go into negative, and then you'll have to pay that back and bring your account back to zero before they'll let you trade again. And if you don't pay that back, as far as I know, I could be wrong, I think they take you to collections, because you owe that money to them, to the platform or the broker. But generally, at least from what I know, usually they'll margin call you or auto liquidate your position if there's a risk of you going negative. Of course, you should never count on that, because you always want to practice proper risk management and all that good stuff. Any questions on those things before I continue?
No, not at all, my boy.
Cool. So when it comes to tick value, point value, monthly expirations and such, I'll just go over the main indices that people usually trade. So there's ES, and then there's NQ, and then there's YM. ES, for those who are not familiar, that's the S&P 500 futures. NQ is NASDAQ futures or tech. And I can't spell today apparently. And then YM is the Dow Jones Industrial. So for ES, and actually before I continue, so every index or futures, product or whatnot, has different tick values, point values, etc. The monthly expirations tend to be the same. I think like oil, I think they have different ones, if I recall correctly, but I'll show you guys an example in a bit. So for ES, it moves in increments, so the tick value in this case is $12.50. And then when it comes to futures, they are when you see futures, when people talk about like the S&P is at it went up 10 points today or whatever it may be. So it's different than if we're looking at a regular stock that will say, oh, Apple went up $1. But when it comes to futures, everything is generally spoken in terms of point value. So 1 point in ES equals 4 ticks, and then we'll go into the specifics. So actually before I continue, I'm not sure the word that I would use for this, but tick increments. There we go. Increment would be 25 cents, or a quarter point. So 1 point in ES is the equivalent of there's 4 ticks in a point. So every 25 cents that it moves, you'll make or lose $12.50. So if we go to ES now, you can see that, let's say if we zoom in, you can see the different tick values. So there's 5322, 25 cents, 50 cents, 75, then the next point. So this moves in 25 point or quarter increments for the tick increment. And then in that tick value, like I mentioned, you make or lose $12.50. So for every point that ES moves for or against you, you're gonna make $50. And so this will be 50 bucks for ES. For those who may be coming from this from an options, I guess, point of reference, the simplest way that I can explain this is think of an option contract with a fixed delta of 50. And with futures, compared to options, there's no theta. So let's say if you open up a position, let's go back to the chart. Let's say I got in at 5324, and then my take profit is up here and my stop loss is down here. This can chop for 5 hours in a row, and I'm not gonna lose value just because time is passing by. I'm only gonna lose value if it hits my stop loss, or if it goes under from where I got in, whether you're buying or selling. So some things that I like about futures compared to options, like I just mentioned, there's no the Greeks or theta, nothing like that. You're literally just buying and selling. For those who came from Forex, pretty much the same thing. You're either buying or you're selling, and that's it. In case this question does come up later, I'll just mention it really quickly. I prefer futures trading over Forex because you don't have to worry about spreads and things like that. And you can trade. Let me just bring this up real quick, actually. So also for those in the group, there's an entire future section. So keep that in mind. Let's go here. So people who trade Forex, you can trade the pairs here. There's, British pound, Japanese yen, so on and so forth. People like to trade Euro USD, just trade Euro FX, or E6 is the ticker symbol. But again, I'm biased because I just find futures way more efficient than Forex. Of course, there may be some perks like lower margin requirements and things like that, but yeah. Just a little tangent. So for NQ, very similar to ES. It has 4 ticks. Is it 4 ticks? I haven't traded in a while. Let's see what the internet says, so I'm not here talking out of my behind. Yeah, the same thing. There's 4 ticks in 1 point of NQ, and you make $5 per tick and 20 bucks per point. Now, even though the point value is less than ES, NQ is a lot more volatile in my experiences. So ES moves relatively slow, NQ moves pretty fast. So if I were starting out with futures, I will start with MES, which is the micro, which I'll go over in a bit. NQ can be super volatile, so if you are not ready for those pullbacks, definitely just paper trade it, or ease yourself up into there. And then like I was mentioning earlier with the different tick and point values, so for NQ it's similar to ES. The main difference is, like I was just mentioning just now, the tick value is $5, and then the 1 point is 20 bucks. Now for YM, it doesn't move in any tick increments. One tick is 1 point for YM, and 1 point is $5 that you make per point in your favor or against your favor. I personally like trading YM. It moves pretty quickly, similar to NQ, but the pullbacks aren't as violent in my experiences. So if you want to try it out, definitely do and see how you like it. But I tend to prefer that after I traded in Q for a while. And then of course, there's a bunch of other ones for people who like trade gold, like trading gold and stuff. There's gold futures, and all these other ones. And with futures, you could really trade a lot of different commodities. You can trade cattle, hogs, milk, literally whatever you want. Honestly, that's on this list. What's another one that people usually go for? Energies. Yeah, people like trading oil, which is CL. I trade oil here and there. Definitely paper trade it if you want to get into it. But yeah, these are pretty much just the main ones that I mainly see people talk about. For those who are coming here from Forex, this is just the Forex equivalent, or actually it'll be either SPX 500 or it'll be US 500, NQ, NAS 100, or US 100, and then YM, as everybody knows, is US, or you should know anyway, it's US 30 for those who come from the Forex land. Any questions before? Actually, I forgot one other thing. So for the last part, for monthly expirations, similar to options in the sense of, there's an expiration date, but it's different in the sense of it's just monthly contracts. So I'll show you an example real quick. And let me actually bring this up real quick. So each month has a different contract code, and you can tell what month or contract you're trading by, the letter in the name. And I'll show you guys an example. Generally, the first 2 or 3 digits are going to be the contract, or the first 1 to 3 digits are going to be the contract symbol, the expiration month, and then the year. So if we go to TradingView, let's just say we go to ES, and I just expand this. So there's ESM for June, ESU, September, December, so on and so forth. So these are the expiration. And the current contract that we're on, the monthly one, is M for June. And then the year, obviously, 2024, since that's what we're in right now. You can, if you want to, trade the other ones, but you never want to do that because the volume is very, very low. You always want to focus on the current contract because that's where all the volume is. And you'll get a lot more wider spreads if you're on the later contracts than the current one. So definitely try to avoid that if you can. If you trade on TradingView, you could just do ES1 exclamation. That'll just give you the current contract that you can trade on if you don't want to pick the specific one. Last I checked. Any questions on that before I continue?
That's the same thing for NQ too, right? You just trade the NQ contract.
Yeah, so NQ, basically whichever one, it's all going to have like the monthly contracts. You go to YM, same thing. If you go to gold, they all have the different contract. But you can just trade GC1 exclamation. I think they added that recently, sometime this year, where you could just trade the continuous contract and go from there, which is great because the issue that I had when I was trading futures on TradingView before is that you can only trade the specific ticker symbol for that monthly contract. So I would draw all my levels or etc., and then have to redraw them all over again for the next one, as opposed to
expired.
Yep, exactly. Instead of just continuing with the continuous contract that'll show you past data.
Okay.
Any questions before I continue? Cool. So a question that I tend to get is, people always ask me like, hey, how much does like one ES contract cost? Because, you know, if you're coming from options, we're paying whatever the premium is for that specific contract, strike price, expiration, etc. But for futures is different. Like I mentioned earlier, you know, futures trading, excuse me, you're using margin. So depending the platform or broker that you're using, the margin requirements are very, very different. I tend to use Tradeovate since the margin requirements are very low compared to other platforms. And I'll show you an example here. Like on Thinkorswim with Schwab, the margin requirements are very high. So for one contract of ES, you need to have at least 17.7K in the account to trade one contract. And this price here fluctuates with market volatility. I think like 2 weeks ago it was at like 12,000, and you can see it went up by 5,000. Compared to, let's say, let's go to Tradeovate. So Tradeovate, for example, let's go to ES. It's only $500 that you need to trade for the day margin. Where's this?
So
Yeah.
that's the amount of money you can add to your account to trade.
Yes. However, people usually say to at least put in 3 to 4 times that amount, because you don't want to get margin called and you don't want to get auto liquidated. Because remember, you need minimum 500 to trade one contract. If you get into position and you go under 500, they're gonna auto get you out of the trade.
Okay.
So you always want to have at least 3 to 4 times the amount of the day margin. You may be looking at initial margin here. Initial margin is if you want to hold the position overnight. And overnight for futures is from 5 p.m. Eastern to 6 p.m. So futures is open from 6 p.m. Eastern to 5 p.m., the following day. So if you don't close that position, you're going to need at least this much to carry that position overnight, which is an hour. The markets close on Friday evening and Saturday, and then it reopens back up on Sunday at 6 p.m. So always make sure to close your position before 4:59 p.m. If you're using a prop firm, generally they would auto close your position. Some of them, some don't. And if you don't close your position, they'll fail you. So keep that in mind. One thing that I was going to mention before I got into this, I forgot, was there's also let me organize this a little better. There's also the micro contracts. So like the micro contract of ES would be MES, which is micro ES. It's pretty much 1/10 of the value of a mini contract. So this will be like, you can say this is the mini contracts. Why they call it mini, I have no idea. But so the micro, like I mentioned, is 1/10 of the value of the mini contract. So for MES, just divide it by 10, and then you'll get your prices. So instead of being 12.50, it'll be 1.25, and then you'll make $5 instead of $50 per point. Now, if you have a smaller account, you can always start off with the micros and then slowly build yourself up. Some people, I see them trade like 10 contracts, which I guess it makes sense if they want to scale out. But just keep in mind, you'll be paying more commissions and fees because you're opening up more contracts if you do go the micro route. When I first started, I started off on the micros, and then once I understood it more, and then I went to the minis and went from there. Cool. Any questions on margin requirements before we continue? And I just realized something. Some people may have asked questions in the chat. All right, cool. No questions in the chat. Yeah, any questions before I continue?
No, that would be all, bro.
Cool. So, where can you trade futures? Like I mentioned earlier, you can use Tradeovate. Margin requirements are pretty low. Hold on, let me log in here real quick. Can't have the internet seeing my password. Cool. So for Tradeovate, there's a desktop version. This is just the web version because I'm lazy to bring that up. But I personally love Tradeovate. I chart on Thinkorswim on my other screen, and then I'll have Tradeovate up to execute my trades on. The platform is super efficient, really easy to use once you understand it. It probably took me maybe like a day or less of like understanding it fully, like sitting down for an hour or two, and like 3-4 hours. But one of the things that I love is the ATM settings or features that it has. ATM settings are just like, I think it's like automated trade management. You may know that as like, you can set bracket orders. Actually, speaking of which, I have to re-enter a trade. On the 15-minute. So let's say here, I'm going to place this trade. So I have this trade set up. It already has my stop loss and my take profit already set based on the ATM setting that I have. This specific one, I have it set to take profit at 50 points or stop me out at 30 points. And I pretty much have the trade automated almost entirely. So as soon as it goes 20 points in my favor, it's going to bring my stop loss up from 30 points to break even plus 5 points. So if it does come back, it'll just take me out at 5 points. And then I have an auto trail, which every 10 points that it moves after 20 points, it'll move my stop loss up 10 points until I either get stopped out or until I hit my take profit. So I don't have to babysit this trade at all. Everything's already programmed into the system, which is super convenient. So one thing I personally love about Tradeovate, all the different ways you can automate your trades and stuff like that. Another one that I use here and there is Thinkorswim, but like I mentioned earlier, what I don't like is that their margin requirements is super high. So for me to trade 1YM contract, I need 13 point almost 4K to trade one contract, as opposed to Tradeovate where for 1YM contract I just need $500. It's a no-brainer. And if you want to hold it overnight, the margin requirement's less. But remember, keep in mind that the margin requirements can change at any given time. The platforms have the right to up it or lower it whenever they want. So I think like 2-3 weeks ago, when there was like something happened like overseas, and like the market was like tanking, somebody asked me why they couldn't open up the same position size. And when I told them, I'm like, hey, you're trying to open up, it's like 4 NQ contracts. It went from 1,000 per contract to 4,000 per contract because of the volatility. So they can change that whenever they want. So keep that in mind if you're trying to trade during volatile times, and then you get like order rejected message or something like that. But yeah, Thinkorswim is cool. I try to do all my trades here anyway just to keep it like in one place. But in terms of efficiencies, I find Tradeovate much more efficient for me, and their order entries, like their advanced orders, like the ATM, is a lot more advanced than Thinkorswim. Like this retracement one that I have, I can't set that up. They don't have it yet for Thinkorswim. I'm hoping they do in the future, but for those who like TradingView and trading on it, you can't necessarily trade futures from TradingView, but you can connect your broker to TradingView. So let's say if you want to put in your trades on TradingView, you just have to log into your TradeAvate account. And keep in mind, if you're going to do that, you have to pay, I think, like $10 a month to connect your TradeAvate to TradingView. And there's other ones. They have a bunch. Let's see, what are the other ones? Yeah, TradeStation is another one. I used TradeStation for like a month, and then I discovered TradeAvate and went with them. But yeah, there's like a bunch of different brokers that you can use. More than likely, with the people who are watching this video, we're going to be either using TradeStation or TradeAvate, but more than likely TradeStation. If you use a prop firm, you can log in through your prop firm if they allow it into TradingView. As far as I know, most of them allow it. Apex, which is what I use, they allow it. I used to use Elite Trader Funding. They allow it too. Take Profit Trader as well. And some other, I think, like, I forget the names of some other ones, but those are the ones that come to mind. You can connect your TradingView to them and then just take the trade on the chart. One thing that I would say that I didn't really like when I used to trade through TradingView with TradeAvate is when you go to execute your trade, it can be a little laggy sometimes, and it could be like a little delayed. So let's say if I'm going to go place a trade for this, I have to, every single time, as far as I know, I have to manually click on my take profit and stop loss. And if you don't click these boxes and then get in the trade, it will not allow you to add the stop loss and take profit after the fact. You can, you can manually, like, let's go to Bitcoin real quick so I can show you guys a quick example. Not futures, I want to go to Bitcoin itself. So let's say I get into this trade, just add that. So it has my take profit and stop loss, and I can move it around on the chart, modify the order, so on and so forth. But when you're trading futures, like through a broker, if I get into trade just like this, even though on my screen here it shows me that I can just add it, when you're trading with a live broker, it will not allow you to use this feature here and just place it on the chart and like modify it. So you'll have to set like a manual take profit and stop loss. Like let's say I go long here, and then you put like a buy stop, and this will be your stop order for this trade. And then if you wanted to sell, you'll have that. But keep in mind, these are two separate orders. So if one of them hits, you have to manually cancel out the other one. What one of my mentors, Brown, does, so he'll have like TradingView up. I'm gonna make it bootleg just because I don't want to make it perfect right now, but he'll have the DOM up here with his ATM settings set to whatever ATM it is, and then he'll have his chart like this, so he can still execute the trade on TradeAvate, which is basically instant, and then he could just manage it on TradingView. And since you already have your ATM settings, it'll just translate to this screen here. So something to keep in mind about.
When you say ATM settings, what you mean by that? Like,
that's the bracket orders that I just mentioned here.
Okay.
So for example, the one that I just opened up here, I have my settings preset: 50 take profit, 30 stop loss. But I have other ones. So I have like this one, stop loss 15 points, take profit 20 points. So as soon as I get in this trade, as soon as let's say I'm going short, it already puts my stop loss and take profit. I don't have to manually enable it every single time.
Okay. It's preset.
Exactly. You're presetting everything. All you have to do is just get into the trade and let the system do its thing.
Okay.
So you can just do that here when you're getting in those trades, and then just manage it on the screen if you want it that way, if you prefer TradingView.
Okay.
But yeah, that's pretty much it for today. Wasn't going to be too long of a class. Any questions you guys have?
Yeah,
Sorry, go ahead. Sorry.
thank you. It's Moon May. So, other than the theta decay that doesn't happen with futures, like what are some other benefits? Like, why do some people choose to trade futures versus options?
So the tax benefits are different. Futures get taxed at a different rate.
Oh,
Um,
okay.
so there's tax benefits to that. Keep in mind if you use a prop firm, it's not taxed at the regular futures, uh, like the way they calculate it, because you're like a contractor for the prop
Mm-hmm.
firms. But if you're trading futures yourself, uh, the the way the taxes are handled for like capital gains or profits is different, compared to
Okay.
options or regular stocks and things like that. So that's a
Yeah.
benefit that people like.
Yeah, that's a good one.
Also, it's a very very liquid, um, product. So you never need to worry about illiquid, um, like when you're trading. It's not going to be illiquid. It's going to be very very liquid because this is a lot of people trade this.
Okay.
What were you going to say, Mike?
I was gonna ask you. So, on TradingView, you see the OCO bracket. How you could just like slide. You can't do that on Thinkorswim, right?
You could do
I
that.
love that feature. Like bring up the OCO bracket on TradingView real quick.
So you just hit stop loss, take profit, get in there, and then just move it on the chart.
You could do that on Thinkorswim just like that. Like move it the
Yep.
chart like that.
Yeah. Hold on. Let me open up a paper trading instance of Thinkorswim. So I'll show you. It's just not as you saw how fast I did it on TradingView.
Mm-hmm.
It's not as quick, on Thinkorswim, kind of, and I'll show you an example. Like we were talking the other day about like the template. The templates on Thinkorswim is the equivalent of like ATM settings on what do you call it, on Tradeovate. Let me just bring this up real quick. It's 7. All right, cool. Let's go to YM. Let's bring up the active trader. And so if you want to just keep it simple, so with the template like we were messing around with before, let me just keep it single. So when you first bring up your active trader or the DOM for Thinkorswim, where it says template, you can edit that. So you could do like, not OCO, you'll do I think it's trade with bracket. So my stop loss, let's say if I want to make this 15 points, take profit or stop loss, and then let me go to, how do I save this? Oh, right here. So after you set up your bracket setting, you're gonna go to the little like file here, save order, custom template, whatever, and just name it whatever you want, 15-point test. So as soon as let's say I want to get in market with this bracket order already there, send that, and now as you can see, it has my levels here, and then I could just move them on the chart, and then I just drag and drop and modify them. So you could do it the same way.
And where's your your buy-in?
I just did market, so I just bought in at market. But your fill price, it'll be your average price. So I got in at 39158, as we can see here, and I'm down 2 points because it's at 56. So I'm down $10, as we were talking about before.
Mm-hmm.
Now, keep in mind, let me actually test something since I haven't used this like this. So I'm long, let's go short, let's sell 1. Yeah, something to keep in mind, as we just saw here, I sold market to get out of that trade, but my bracket orders are still there. So make sure to flatten if you want to cancel everything. So if I bring in my bracket order again and buy market, that buy has these trades attached to it. But if I'm selling market, there's no bracket orders attached to that or anything. So you want to make sure that if you want to just get out or sell market or whatever it may be, that you flatten the trade. So I'll show you an example what may happen. I'm going to sell market. So I got out of that trade. My position is 0. I'm flat. I don't have any open trades. But let's say I move my stop up. Let's do it here. And then let's move my stop loss here. And let's see which one fills first. I want to see if it does what I think it's going to do. And hopefully it doesn't take a million years while we're here live. Any second. All I have to do is just move 1 point. That's it. Just 1 point. Alright, let's move this down. So as you can see, when I got in that sell limit, it canceled the stop that I had from the initial buy, but now I'm short a position right now with no bracket orders set. So if you're going to get out of the trade, whatever that may be, just make sure to flatten so it can cancel all the pending OCO orders as well. So I can either buy market in this case, since I don't have any other extra orders, I could just hit flatten to just cancel, get me out, and cancel everything. Any questions on that? Or any questions, period, really.
So are you using the strat method when trading futures?
No, I don't use the strat when I'm trading futures. I use fibs and some ICT concepts.
Okay.
Like in the playbook section in the group, you'll see like that W setup that I talk about a lot. We can see it right here. So we get the move down, the retracement, the push back down, and we get a 3 up. So what I'll do is, if I see it's about to become a 3, I'll open up a stop order. I'll open up a buy stop order. So as soon as it becomes a 3, it gets me in automatically. That's the only trade for futures that I use like with a strat entry. Otherwise, I'm just using fibs to get in and some ICT concepts here and there.
Okay.
In my experiences, and from what I've seen from other people, ICT concepts are super efficient for futures. I do know people who trade the strat for futures. You can make it work. I just personally find ICT and fibs a lot more efficient than the strat for futures. But again, I know people who trade the strat for futures and it works perfectly for them. It's very similar to, well, it's, if you're trading options using the strat on like SPY, it's the same thing if you're trading ES. You just have to be ready because, a stop loss on an option might be like $50 or, $200 or whatever it may be, depending on your position. But for futures, that could be very, very different. So let's say, as an example, let's say I took this 3 up. I can either use, actually, let's not use that as an example. Let's say, let me go on trading view so it'll be a little easier to see. So let's say I took this two down reversal. So this two down right here once it breaks that low. So strat wise, I'm gonna get in here. My stop loss will be above that candle, and then my take profit would be down there at the wick or the body, whatever you want. So in this case for futures, my stop loss is 17 points on this specific setup. However, of course, that can vary. Let's say if I took this two down right here, that could be very different than, the stop loss here would only be 7 points. So you're going to get a lot of inconsistencies with your stop loss if you're trading strat with futures. But again, the strat, yes, does it work for futures? Absolutely. I just prefer using fibs and using some of the ICT concepts that I use to help out. But that's just me. If the strat works and everything else that you guys may use, more power to you. Do not let me dissuade you. There are many ways to trade the market, and these are just the ways that I trade it.
Makes sense.
Yep. Any other questions you guys have?
Nah, cause that's it for me.
Cool. Let's do 90. Whoever's watching this and you trade futures, these are trades that I'm getting into, which will hopefully, at least one of them will trigger overnight. I'll be canceling these if they don't fill.
Hopefully.
Because that's what, right now we're at 100. I highly doubt it's going to go up 400 points. But I like to just keep them pending there anyway, since these setups, I just have to wait for them to fill. I don't need to babysit it.
Yeah, that makes sense.
All right, what price is this? Because this thing is not giving me... It's 395.90.
You still be doing one-on-ones, right, buddy?
Yes, sir. Let's do retracement. There we go. Cool. So yeah, these are just some trades that I have here for YM, some shorts. Anyway, if that's all for today, thank you guys for coming out. Of course, any other questions that pop up, just let me know in the group, or if you're watching this on YouTube and you're not in the group, post a comment in the chat and I'll get back to you. For those in the group, like I said, I have a whole futures guide section, so go over all the material in there. If you want to look into prop firms, there's that stuff. ICT stuff is in here, and a lot of other things that you guys can benefit from. Other than that, that's all I got for today. Again, appreciate you guys for coming out, and enjoy your Memorial Day weekend and the rest of your Sunday.
Thank you.
Welcome. Later, y'all.
Thank you, that's it.